We're seeing a theme in this earnings season so far, which is managed expectations and those expectations being met. Given the bar has been so much lower than previous Netflix earnings reports, was there much that you were impressed with in this release?
Oh, yeah. Actually, I thought it was a really impressive release. You know, when you get past subscriber growth and you actually look at the numbers underlying their earnings this quarter, they were really impressive. I mean, they beat the street by a substantial amount on actual earnings and revenue growth of like 31%. I mean, this is a big company growing at an enormously fast speed. You know, it's a great company doing well. So I think, you know, it's time that we spend a little less time focusing so much on sub growth, which will continue to grow, but it's so hard to call quarter to quarter, and looking at the underlying financials of the company, which are improving dramatically now with the international expansion.
Ross, I'm glad you mentioned the international expansion because that's really been where the strength is, that pop you see. And I want to bring up this Bloomberg chart that shows that looking at international subscriber additions offsetting the weakness we've seen in US growth there. That's where we see the pop, whereas we had the weakest growth in 3 years in the United States. Is it saturation in that market, and are things going to get a whole lot more challenging given the competition in the pipeline with Disney?
Well, I think, you know, first of all, everybody in America has Netflix. So to grow, it's like, you know, from who? You know, it's like people living under rocks. And so, you know, they've been enormously successful with a great margin. So this is an international game, and the international markets, by our estimates, are there's about 2 billion people on Facebook, for example. So let's say that's the total, you know, addressable market. And we see Netflix getting to 200 million subscribers over the next 5 years or sooner as this international growth builds out. Because remember, in a lot of the world, there's really nothing to watch at all. Like, I have a friend in Thailand, and it's like the military's junta channel or Netflix. And so, you know, it's really a wonderful option for people. And they're making phenomenally good foreign content. I end up watching more foreign content on Netflix now than domestic content. So I think that will continue to grow for them for quite some time.
Ross, you'd state that the fundamentals are strong, but they're still posting negative free cash flow of $3.5 billion. And the company says that they're not likely to see that positive anytime soon. What do you need to see to sort of stabilize out and eventually turn positive on the free cash flow?
Yeah, so this is the problem that I have with Netflix, and their basic business assumption right now is that they're borrowing, you know, $3 billion plus a year to fund future content. And I get that they're front loading content to keep ahead of the competition and to really satisfy the 100 odd markets they're in, but it's not a sustainable business that way. So I think what Netflix has to get to is a certain point where they say, look, we're going to stabilize our content spend and then let the revenue growth become a bigger operating margin for them and ultimately lead to free cash flow positive. But they're spending way too much money. That's my criticism of Netflix. They overpay for everything and everyone, and it's time for them to put a little discipline in on their spending. And they need to look for other sources of revenue, which I think they need to put movies in the theaters. They need to, you know, acquiesce to the theater companies and do what needs to be done. But the fact that The Irishman isn't going in wide release, one of probably the greatest movies that they'll ever make, is really a tragedy, really, for filmmaking. And they need to change their thinking on this and get in bed with a theater chain or buy a theater chain and get these movies in the theaters and make revenue off it. Otherwise, Disney is really going to eat their lunch and even Apple announced that they're going to put their movies in the theaters. So that's something Netflix needs to think about if they're going to make these numbers work.
And one Netflix bear said it'd actually be wise for them to purchase a Hollywood studio. Why don't they do that?
I don't think that's wise for them. You know, Netflix has done very well with their partnership, you know, approach to Hollywood. Hollywood's the kind of place that you either play their game or you're cut out. And, you know, it's sort of like Apple's problem. You know, Apple doesn't like to play the game, and so they're kind of on the outs. And so Netflix is half of Hollywood now. And so they don't need a studio. You know, what they need is other revenue sources like advertising or box office sales.
Ross, with valuations still looking very high, particularly if the assumption going forward is that slower growth and greater competition is the new normal, will you be reducing your holdings of Netflix going forward?
Well, we already did. We reduced our holdings over the last, 6 to 9 months in the 350 range because we're big Disney shareholders. That's our largest position at the firm. We think the Disney Plus app is a huge winner on a global level. And really, Disney has a great business model because they've already monetized all the content, and then they can put it on an app and monetize it again. And so, we think Netflix has a lot of competition coming. I think they're ahead of that competition, but boy, you've got to look at the valuation here. And so Netflix is actually a hold at our firm. It's not a buy.